This video is going to look at Cummins Inc. through the lens of the FastGraphs research tool. FastGraph stands for Fundamental Analyzer Software Tool. We're going to start by looking at the earnings and price correlated FastGraphs for the period 1997 to current. The orange line on the graph is the earnings justified valuation line, or the real intrinsic value of the company based on earnings. And as you can see, over the years, Cummins has been somewhat cyclical, but they have had extended periods of earnings growth. During the Great Recession of 2008, where we saw earnings fall rather precipitously from $4.02 down to $2.31, and then of course the stock price fell from 70 to a low of over 20. And I think what this graph really depicts is what an incredible buying opportunity that was, because as the recession ended, Cummins again began to start generating strong earnings growth, and by year 2010, their earnings had increased 122% back to $5.12, the highest ever in this period, and then that's followed by another 57% expected increase to over $8 a share by year-end 2012. And of course the stock price has reacted very strongly to that reacceleration of earnings growth. When you look at this chart from the total perspective, you see that there is cyclicality in this company. However, we also see that the company is a strong growth stock. They've averaged 14.9% earnings growth since 1997, with some interruptions in between. The company currently trades at 15.7 times earnings, offers a 1% dividend yield, and has less than 12% debt on the balance sheet. When you look at the performance associated and correlated to the above graph, you'll see that Cummins has raised their dividend many times over the last 15 years, although there have been periods during the cyclical period where they were able to just freeze their dividend and kept their dividend the same 30 cents. But then, they came into the recession and they actually raised their dividend throughout the recessionary years. A $100,000 investment in Cummins Inc. at the end of 1996, the beginning of 1997, would have grown to $926,000. That's a 16.5% compounded growth rate. That compares extremely favorably to the 4% return that the average based on the S&P 500 would have generated. Add dividends in, they paid $48,000 in dividends over this period, which was actually more than, again, the S&P 500. And over time, shareholders have been well rewarded, but there have been periods of cyclicality along the way. If we focus only on the last 3 years, the period as we entered the recession and then came out of the recession, we see what an incredible opportunity the crisis actually created. The earnings drop had caused stock prices to fall, but as the company's earnings have recovered coming out of the recession, from the beginning of 2009 to current, shareholders in Cummins would have averaged 71.2% compounded rate of return. And interestingly enough, the average company, as measured by the S&P 500, has done very well during this time also. But you can see that Cummins has done extremely, has done much better than the actual market. And again, the dividend, was pretty healthy over this entire period as well.